Welcome back to Your Average Investor. We're going to be talking some GameStop again today for the end of the week update. And wow, what a wild ride it's been. Now, if you can, ignore these lines on my screen right now. I know it looks kind of crazy. I'll explain what all of them mean in just a second. First off, hit that subscribe button if you haven't already. Once this channel gets monetized, we're doing a $1,000 giveaway. And you could use that to buy yourself some shares of GameStop. So, here's what we're looking at, right? GameStop had their crazy rally, big sell-off. And then the second rally, when Roaring Kitty announced his position, a little bit of a sell-off into some massive strength. And then what happened this morning was wild. So Roaring Kitty announced yesterday he announced he would be doing a live stream today at whatever time he did it at. And then this morning, GameStop announces their earnings several days early and announces a $75 million 75 million share at the market offering. And that just obliterated the price. Likely they started selling right away here. The reason why I think that is the people that are holding GameStop, they're not looking to sell yet. They want to see all-time highs. Most of them do. Some people don't, but most do. And the at the market offering, like the only what's this downward pressure going to be if not sales by GameStop themselves? So they start selling. They probably start selling up here, right? So let's just pull this volume up. So we've got like, we'll go 4, 8, 12, 20. We got like $20 million in 20 million shares here in pre-market. Then we got 20 mil, 20 mil, 10 mil. So there's another 40. There's 60, 70. By about here, they've got more than enough volume. Even like we'll just call it right by here. They've had enough volume on the day to have sold all of the shares that they need to sell. And so let's just say they did that and they got an average fill of $40 a share. So we're going to say $75 million times 40. They just raised $3 billion in cash. And that's a really interesting place to be in if you're looking at long-term GameStop and want their revolutionary transformation of the business to take place. The question remains, though, what are they going to transform the business into? They tried the NFT marketplace. That kind of flopped along with NFTs in general. Maybe they've got a secret plan to revive NFTs. Personally, my favorite theory, this is my pet theory, is that they are working to develop some sort of... So I've got two pet theories going on. One is more backed based on GameStop's recent actions. The other is just more of a pet theory that would be entertaining and fun. But so GameStop is trying to turn a lot of their centers into like local gaming hubs where you go and like actually stay there for a couple hours or whatever to play games with your buddies or just play games randomly with people. That I think could be a really interesting model. Having people come into the stores, just making them the epicenter for gaming. I remember LAN parties back in the day where everyone would lug their computers over to someone's house or all their Xboxes and TVs over to someone's house, and we'd have a 16-player Halo Fest. Like those were the days of gaming. That was so fun. And then everything went online, and it's still fun, but not as fun. So I could see that working out. The thing that I think would be more entertaining, though, is if GameStop announces that they are developing some sort of like AI-based MMORPG, and like think like the Oasis from Ready Player One, and I think that if that were to happen, that would be one of the most incredible turnaround stories in the world for a couple. And here's why: is they've got this massive following of people that want to support GameStop. What a better way to get them to support than releasing an MMO that they can pay monthly for? Like think like World of Warcraft, but 25 years later with better everything, and hopefully they leave out a lot of the pay-to-win tactics that people hate. I think that would be the most entertaining outcome, is to see them transform like that. Now, that being said, let's just look at this from a little bit of a technical analysis, what's going on. So let me explain these green lines real quick. This is my average purchase price of my 300 shares of GameStop. So I did a video on this back when I was buying. I bought the 300 shares right about here, a little bit above and below, but that was my average that day. 300 shares at 34.55 was my cost basis. That same day, literally as I bought them, I would immediately sell call contracts that were just barely out of the money. So it was like a call 35, call 36, call 34, something like that. I made $2,180 in premium. Then the price moves down, then the price moves down, and then the next day there's this little surge, and then it came back down, and I was like, you know what? by the way, these contracts would have all expired today. They would have all expired worthless today, based on the current price. But I'd seen what was going on here with this little lift. I was like, I'm gonna buy them back. So I bought them back for $100 a pop, about like 110, 120. The third one actually I couldn't buy. I tried to buy back, but I didn't realize the order didn't go through, and so it didn't. Market closed. And anyway, I ended up having that call contract. That's the one. I'll show you where it's at now. So I ended up rolling it to a higher strike and further out date. But I bought them back thinking for sure there's going to be a little rally coming soon and I can sell more later. And sure enough, the next day it rallied. And right around here, I sold some more contracts. Now, I didn't expect the rally to continue on even higher, but I sold some more contracts to collect more premium. And again, with the hopes that we see a little bit of upward, downward movement. And the way that I did it is I had 2 contracts out that I sold. I've sold a call 40, which is represented by this hash line here, and a call 70, which is represented by this one up here. And then the last 100 shares I have, I let them remain with no call contract sold because I wanted to participate in more upside just in case we were pushing for all-time highs by the end of next week. And so with all of that premium sold, even though this is my purchase price, if GameStop drops all the way down to 25.09, that's my break even. So if all of those contracts expire worthless and I sell my shares of GameStop at 25.09, that's my break even point now. And you can see we're hovering just a little bit above that, kind of close to it actually. But I'm not worried about it because all that's going to happen is I'm going to sell more premium into strength each time GameStop has a pop. And I think we've got a pretty comfortable floor going on here from a technical perspective at $25, but also from the perspective of that's where, that's really where Roaring Kitty is defending the prices between $20 and $25 per share. And we've gone over the support and resistance lines from the last few years in the last videos, so if you want, you can look back at those videos for that. The interesting thing, though, is to see this kind of a pattern forming where we've got 2 things that are interesting. One is this is a lower low or lower high, right? So you see lower high here, but you've got this nice big base of volume that's now forming right in between. This is a big range, I'm going to say, but between $30 and $20 per share. So I wouldn't be surprised to see price bouncing between maybe 25 and 30, maybe 25 and $35 per share, and then have another breakout happen sometime in the next month or two. And that's what I'm really waiting for, is to see what happens then. And here's one of the reasons that I think that's so interesting. It's actually because of what Roaring Kitty is doing. So remember, Roaring Kitty, he made about $55 million on this initial GameStop surge back in the day. He started with 50K, turned it into 50 mil. He goes quiet for 3 years, and then he turns back up with $200 million. $200 million. So he 4x'd his money over that 3 years. And 4xing money is, the more money you have, the more difficult it is to double the money. Because so for example, if I have $100, I can go to Costco, I can buy some bulk sodas on a hot day, go out to somewhere where a bunch of people are and sell them at double the price and double my money. That's pretty easy. I can double my money in a day. But to do that same thing with $10,000 also all of a sudden is a lot more difficult because, well, now there's a lot more people I've got to sell sodas to, and I don't have the time to do so, so I've got to hire people or do other things, right? Similarly, for trading, it could be said that doubling your money at $500,000 is a lot harder, or excuse me, $50 million is a lot harder than doubling it at, say, $1,000. But he did it, and he did it twice. He doubled and he doubled again for a 4x increase. In fact, possibly he had more like a 6x increase, because if he's buying and selling and day trading, he's going to have to pay capital gains, or excuse me, ordinary income tax. He'll be creating taxable events for himself. And so if he had to pay taxes along the way, and he ended up here today with 200 million, maybe he had closer to 300 million and had to pay a bunch of taxes. I don't know. But he for sure doubled and then doubled again. And if that's the case, man, to take a portfolio from 50 million to 200 million over the course of 3 years, that is some extreme talent in trading and investing. And I would be very surprised if his most recent GameStop trade doesn't work out for him. Now, what I wouldn't be surprised on is a lot of people who bought GameStop options the last few days when the premium was juiced, their trade's not working out for them, right? Like, let's just look at these premiums real quick so you can see what I'm talking about. Look at these 0 data expiration premiums. At market close, there were still people on the bid for these call 30s, literally at market close on the bid for $10 a pop. Why? I mean, you're 10% out of the money. The only way that you're going to be benefiting from that is if GameStop pops after hours and then you exercise your contract. But very few people are going to have $3,000 lying around to execute that contract. So it was a little bit interesting to see how much premium was left in these. But let's go another week out. You've got these call 28s, 1 week out, $500. So in order for these to have intrinsic value where you break even, GameStop's got to go back up to $33 per share. And this is after a lot of the premiums already been bled out of them. Let me just look at this. So here's this is that contract that we were just looking at. You can see at market open today, it was going for almost $2,000. Now there's hardly any volume here on it. Look at this volume here though, lots more volume here as the price is moving down and these contracts start looking more interesting. Well, now you've got someone coming in and buying a lot of 600 contracts here at about $500 a pop. So they just spent 600 times 500. They just spent 300 grand on these contracts that are decently out of reach, right? So it's not that it's okay. It's not out of the realm of possibility by any means for GameStop to move up to $33 per share by Friday of next week. So if we just look at this chart, right, $33 is right here. And so that would be the break-even point of those contracts. $40 a share, you've doubled your money, whatever, more than doubled your money. But the fact is the premium's already juiced. And so that's why, in my mind, the best thing to be doing right now is to buy shares on dips and then sell calls into strength. Because what you're doing is you're reducing your risk, making it easier to stay in the trade long term. I've taken my cost basis all the way down. And again, I haven't been holding GameStop that long. I bought these shares. I actually bought 100 shares prior to this. I bought them, when did I buy them? I bought them right here, but I immediately sold a call 16. This was before all the Roaring Kitty stuff. I immediately sold a call 16 because I was like, oh, that's a pretty good resistance line. And then it was working out great, and then he announced the stuff, and that actually, that contract that I sold is right here. And so these shares are very likely to get exercised and called away. And in fact, I'm kind of surprised that they haven't already, but maybe I'll wake up to that email tomorrow morning or something like that. Anyway, so I had 100 shares there, but I'm not counting those because it was, again, I went from like $14 to $16 and I made $200 in premium, so I'll make $400 on that trade. Good trade, but not relevant to what's happening right now. I bought another 300 shares here, and now my cost basis is all the way down here because of the premium that I've sold. And I think that this is a fantastic place to be because as those contracts continue to expire worthless, which many of them will. Here's my first contract. You want to see where it is? Right there. Call 70 that expires next Friday. I made like $500 selling that contract. It's already at $200. It's going to expire worthless most likely. And if not, I'm happy to sell at $70. Remember, my buy-in was $35. That doubles my money on those 100 shares, and I've got 300 shares. So then my next contract, this is the one I got stuck in because I tried to buy it back, and then the order didn't fill. So then the next day I rolled it out. So this was like a call 36 or call 35. And so I wanted to get it out of the money. It would have actually been out of the money anyway today, but I had no way of knowing that yesterday. So what I did is I bought it back, and then I turned around and I sold this call 40, and that gave me a little more time. You can see this is 28 days to expiration. Again, I'd be happy selling these ones at $40 a share. Gives me $500 in price appreciation plus all the premium I've gained. And then that last lot of 100 shares, I haven't sold a covered call on. And what I'm waiting for is to see a big push to like all-time highs, and at that point maybe I just sell the shares manually, or do something else. Maybe I sell an in-the-money call. So like let's just say the price pushed to $100 per share. I'd probably look at a call option that's maybe 3 weeks out for like call 80, and I'd sell that with the expectation that it moves back down over the next 3 weeks as the squeeze ends. And, you know, people say the squeeze could go up a lot higher than that. I see a case for that. I could see very easily the price going back up to all-time highs or above. But I'm not really of the opinion that it's going to go to, you know, $5,000 a share or, you know, infinity dollars a share or whatever some of the people say. I do like the charts. I like the stock. I'm in the trade. So that's it for GameStop today. Hope you guys had a wonderful day. Oh, one last thing I wanted to say. No, I think I said it all. It's really hard to keep everything straight right now. I'm tired. It's a Friday. Hope you guys enjoy your weekend. I would love to know, how many shares of GameStop do you guys have? I've got 300. You know my position. I want to know how many shares you have. Catch y'all next time.